Okay, good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 212 for Monday, 26th of January 2026. Hope you're all well. Hope you've had a good weekend. Hope you're not too struggling too much after if you had an enjoyable Burns night supper last night. Some of us did, and it was combined with also basically enjoying the United win yesterday and also Liverpool losing. So it's the simple pleasures in life. But anyway, we had a an eventful week last week in markets. So it looks like we're going to have another busy eventful one in this week. So there's plenty for us to go through. So let's crack on. Just if you're joining us for the first time, the Monday market update is just that. It is me flying through as much as I can share with you in the next 25, 30 minutes, looking at strength and weakness within FX markets and indices and commodities, looking at a few charts of interest to add to your watch list, and then a look at the live markets. It's not a signal service. It's not trade recommendations. I'm just sharing with you what I'm looking at, which may be of interest or use to yourself in your own endeavors. As always, you are very welcome here. Just remember that you are always responsible for your own trading and investing decisions. If you want some more education, then this afternoon I'll be doing the Active Trades Monday Market Matters webinar, 2 o'clock London time. Session, the educational element of today's session will be all about trading the first pullback. You can register on the Active Trades website or use that QR code if you want to join us. Also, if you want a little bit more help and support, you can join the Q1 Dollar Edge FX swing trading mentorship. Okay, that starts next week into February, where we'll for the 8 weeks of the remainder of Q1, we will look at basically running a guided mentorship about swing trading FX markets, utilizing the kind of 4 hour charts and above. If you've got questions, you can ping me, or you can just look at that QR code or that bit.ly code, and that will give you more insight. All right, let's dig into the main thrust of our session. Okay, so if you're new to trading or if you're new to joining us, perhaps this might look a little intimidating or overwhelming. It's not really. It's just some clips out of the work I do at the weekend on my own STAM model, where I'm looking to identify where's the strength, trend, and momentum within FX indices and commodities markets. So, what is this telling us, and how can we help it with our own trading endeavors? So, here we are. All right, we're into the fifth week of the year already. Okay, where's the strength? Where's the weakness? Well, what we have is the Aussie dollar remains strong as it has done. Okay, for the last couple of months. Joining it there. Okay, back up there is Swiss franc. No surprise there. A little bit of a kind of risk off element sort of coming into play, and also some of the joy out of gold, which we'll look at more. Who's at the bottom of the pile? Okay, well, not unsurprisingly, Japanese yen still is at the bottom of the pile based on the weekend details, but that might well change. Okay, this week certainly, what we've seen is certainly at the start of this week. What we saw was a kind of dollar weakening and the yen strengthening. Is a bit of a sort of double bubble on there. Firstly, the new Prime Minister in Japan, Takichi, I hope I pronounced that right. She's basically dissolved parliament, is going for a general election to basically stamp her authority. And also we are looking at, she also was talking about how basically the Bank of Japan are looking at intervening in the yen, and it could be a bit of a double bubble because invariably also the US Federal Reserve will be involved in that. It'll be basically a pincer attack upon that. So that has had an impact on Japanese yen, and we'll look at that a little bit later when we switch to the live markets. But it still remains in the bottom of the pile of the stand. But as I said, I think a couple of weeks ago, I think that might look to start to change. Certainly, dollar is most definitely still at that bottom of that pile, and certainly as we've opened this week, that's basically just been confirmed. A bit closer to home, what we've also had is basically sterling rolling over as well. Not a massive shock there, okay? Mixed picture, but once again, we always finish with sterling, so we'll look at that on the live markets. But a bit of a mixed picture anyway in terms of from the sort of kind of fundamentals and sentiment. And that's probably also been sort of a little bit helped certainly when you look at gilts based upon the decision by President Starmer. He wishes he was president. The Prime Minister Starmer to basically to block Andy Burnham's opportunities to sort of stand in a by-election, and it becomes a bit of a threat to Starmer. So these are the sort of things that basically markets take they take notice of. Okay, and it undermines the overall sentiment. So yeah, sterling's rolled over and it started to weaken there from where it was a couple of weeks back, and we'll look at that more in a moment. Euro fair to middling. A lot of that is to do with, I think personally, is we had Davos last week, and of course we had Trump wading in and saying his piece. And as usual, we have the Europeans with lots of talk, but invariably probably very little follow through in terms of what it actually means or who actually is basically taking notice of it. And so the euro is just kind of just wafting about there, and any kind of strength in that is, I think, is more to do with dollar weakness. But we'll look at that in a moment. Certainly, what we've had is Kiwi dollars had a particular strong bounce there over the last week, and Canadian dollar just fair to middle, not really doing that much, in spite of the in spite of the moves in oil. When we look at indices, commodities, I said this last week that there's a huge amount of green there. Okay, a huge amount of green across the indices. Okay, and across the commodities there. As I said last week, the old saying is that it's at its darkest before its dawn. Well, the flip side of that would be markets are at their most bullish and giddy before they roll over. So we'll have to keep an eye on that. I'll be watching that like a hawk. And as I said, there was all Davos last week. Okay, all the big ones mincing about there. Okay, wafting about. But invariably, what we'll see from this week on is that those kind of players, they're going to start positioning themselves based upon the events of the last week or two. So hence why keep an eye on the invariably what's going on. There's also, as we're about to look at, there's also, some of the there's a heavy earnings week, all right, from the US, and some of the real big, let's say, the big hitters are coming out, which we're going to look at in a moment. But you've got some of those, big Mag Sevens, okay, Microsoft, Meta, Tesla, Apple, etc. They'll be out later this week. You've got some of the big oil companies on Friday, and Chevron and Exxon. You've got like semiconductors like ASML, which we're going to look at, and it's a full on weekend. Some of the finance ones like Visa and Mastercard, etc. So it is a full week. People will be keen as mustard to hear what's going on there, and to look and see what, if any, impact that has on markets through the overall sentiment. So plenty going on with this week to keep on top of. So if you'll just bear with me, what we're going to do is we're going to switch across to the live market, and we'll have a look at the charts there, charts of interest, and see what they're showing us. So if you just bear with us a moment, we'll switch across. Okay, so hopefully you can see the chart and still hear my voice. Okay, so I've got a few charts of interest in here. As I said, there's quite a few elements going on in terms of the earnings. So let's start with Meta. This is a weekly chart of Meta. All right, what's it telling us? Why are we interested? Well, listen, let's bring up the old drawing tool. It has, like most of those Mag 7 tech companies, okay, been on a fantastic run. But we were starting to get curious last sort of, the last 6 months or so, invariably we were sort of hitting the kind of earlier highs on sort of end of 24 into 25. We then put in a really nice weekly sort of double top there. And then we started to kind of sort of fall our way down. All right, okay, what we saw was, support turning into resistance, etc. And we fell our way back down, big round number to $600. And then invariably what we looked at was we pushed back up. And the 50 and the 20, which had acted as good dynamic support on the way up, was starting to flip, all right, and starting to act as resistance. And certainly over the last few weeks, what we did was we dropped down again to, and clearly kind of $600 is is a significant big round number there. Last week we had quite some weak there, okay, and invariably, we kind of bounced up there, but where are we? We're into that kind of 50, into that sort of 20 there. They're releasing Wednesday after the close. Listen, the kind of my generation, I always think of Facebook, but things have changed quite considerably, and I would say in many ways, Meta is kind of almost like a proxy for sentiment with regards to AI, and in particular, how to monetize AI. So it's not just social media, it's not just Facebook. Okay, so I would suggest that any kind of slowdown in ad momentum or any kind of questions about the return on investment on AI, that is what's going to move the stock quickly. So invariably, people are going to be keen as mustard to hear what they've got to say on Wednesday in terms of both those elements, in terms of in terms of ads, in terms of return on investment and AOI, and also just talking about what I personally think is a little bit of a fad, namely sort of them trying to push basically a Meta onto wearing on your Ray-Ban sunglasses. Personally, I think it's a bit of a fad, but others may differ with that. But certainly, good numbers. Well, it has to get above that weekly 50 and 20, all right, back up towards 700. That's bullish. And then you're really looking at, does it have enough what it takes to get back to those recent highs? Poor numbers, overall sentiment weaken. Well, 600, I think, definitely becomes that level. And if we crack that, well, then invariably you're looking down to those sort of Trump tariff tantrum lows around $500. So, it's going to be a good week for Meta in terms of, you'll want to add that to your watch list. Someone else who's reporting on sort of Wednesday after the close is Tesla, and it's a Tesla in terms of looking at the chart is kind of an interesting chart for us to take stock of, because Tesla is spread across so many sort of I would say probably different risks in terms of it's trying to execute across a broad range of technologies. And then you also have into that the kind of the what would you call it, the kind of personality of Musk, all right, or in terms of some people love him, some people loathe him, and invariably any actions he takes or anything he says tends to have an impact on share price. So it is invariably, as you can see there, whilst overall we have been bullish, it has been a very volatile stock, okay, and so it's I would say it's not particularly one for the faint-hearted, and it's really very much why you get you get lots of very devoted Tesla bulls and bears. The thing is that when I look at that, it's basically on the downside. I would be curious, and I don't claim to be a specialist, but you're looking at kind of margins on EVs, all right, and how are Tesla able to maintain that when there is increasing competition, okay, and also the kind of, I think personally, and as a personal opinion, is that the kind of demand for EVs is drifting lower. So you have that element on it, and as I said, they've kind of got the execution risk of he's also got his fingers in pies of course, AI, autonomy, robotics, rather than just simple, vehicle volumes. And so then, as I said, that's when you get into start execution risk. Okay, can he really execute across the board at the kind of world-class levels that it needs to be? And all of that sort of just adds to that kind of volatility in the in the actual overall stock. It is all about the story with Tesla, isn't it? And you either love it or you don't buy it. And that kind of mix of volatility is why we see such sharp moves, all right, following shifts in sentiment. But certainly those numbers, all right. Interestingly, if you look at over those last 6 months, the price it is above the 20 period, it's above the 50. The 20 is acted, all right, as dynamic support. Last week we came beneath it, but actually we ended up reversing, closing back up above it. If we're going to get good numbers, well then, really $500 has to be that kind of target that we're looking for, even though the last couple of times it's been up there, it's never really stayed up there. But if those good numbers there, personally, if there's poor numbers, poor sentiment, some Musk makes some comment, well then I'm very going to be looking at first as the 20 at support, 400 at support, and then the 50 at 360. Okay, $360. So as I said, one to add to the watch list to see how that particularly plays out. Next one is Boeing. They've got their release tomorrow. All right, tomorrow before the Open. And those of you who've joined me over the many years will know that I'm not always the biggest fan of Boeing. Okay, I often say that I think they're going to be a fantastic case study in MBA textbooks about the sort of chicanery that goes on in major corporations, and actually how major corporations can fall once they basically switch their focus from from in this case engineering to being bean counters and playing in the diversity game. Okay, and so hence we saw over the years Boeing really fall away, and as I said, I've not been the biggest fan of it, and certainly we've been down over the last 4 or 5 years, down at 100, 150. But as you can see for yourself, we looked at this a few months ago where I thought it was topping out around about 230, which it did. But you can see for yourself, those last the last couple of months have been particularly strong. We've run from $180 to $250. A lot of that basically, in spite of Boeing being kind of sentiment sensitive, headline sensitive, because the most of the news is poor news. You still have elements of they are riding the back of the kind of overall defense stock play. All right, and they are riding the back of actually maybe a slow turnaround going on within the business itself, and basically this will continue like that until until some poor news kind of pulls the rug on it. But certainly that has been quite some run from $108, $250. You've got to then look at, well, all right, okay. Recent highs of the last few years have been up at 265. Does it have that $14 left in it to push up now? Admittedly, it didn't stay up there long, did it? When it was there last time, it kind of reversed off it, having done pretty similar maneuver. So I'll be looking at, well, all right, can it get up to that 265, 270 area? And when it does, what does it do when it gets there based upon the view? Once again, kind of a lot of that will also see, will the news this week be good enough to basically to keep it heading in that bullish direction? All right, so another one which we've not really covered as much as perhaps we should have, ASML. All right, they've got their reporting this week as well. Yeah, so Wednesday before the Open. Listen, just look at that kind of move that we have seen there, right? In the it's riding off the back of the kind of semiconductors, all right, AI story. Okay, and has done well out of it. But when you look at it, we were down here at sort of $600 okay during the start of the Trump tariff tantrums, and here we are last week tickling the soft underbelly of $1,400. That is quite some. That's quite some maneuver, isn't it? That's quite some run. And once again, that has kind of accelerated these last few weeks for various reasons. Gaps up there, okay. And so you've got to be looking at, all right, well, what's the numbers going to be like on Wednesday? Are those numbers going to basically, keep this wafting higher, or will they sort of kind of pull the wheel, pull the rug from underneath it? Certainly, when I see prices like that, I'm and maybe this is just me being a bit of an old duffer. I'm not looking to literally buy stocks like that are on a parabolic move. I don't buy because my fear is always that you're buying the top of the market. Invariably, my kind of natural self is that when a price goes parabolic and goes vertical, it can't sustain it, and that the likelihood is that it will kind of just roll over at some point. So it kind of goes on my watch list to watch. But if you're already in ASML, if you have bought back in those kind of lows at the April of last year, well done. All right, but I'd perhaps be tightening up my stop and watching that as it rallies higher. And then last one for our charts of interest is a Caterpillar cat. All right, so we've just looked at ASML semiconductors, all right, and of course we've had a look at Meta and Tesla, and there's also Apple and Microsoft, earnings this week. And so a huge amount of focus on those tech companies, that AI story, but the kind of quiet winner that's been just sort of plodding away, doing well for itself is like old school kind of industrial, engineering and vehicles in terms of Caterpillar. I'm sure you all know who they are, but naturally, what we're interested in is looking at, well, where's the opportunity, and there has been a fantastic opportunity. All right, fantastic opportunity. Once again, we hit those lows here, okay, around the April kind of Liberation Day. And it's a very simple trade tactic of mine called the Monga, which is basically, he said that most people would do really, really well if they just bought the price bouncing off the 200 period moving average on the weekly chart, if they could just do that with discipline and hold. And this has been a fantastic opportunity and a fantastic, example of the Monga working exceptionally well. All right, you go back down at $300 region there, and you can see for yourself that has just been a fantastic trend. And as I say to new sort of traders and investors, great trends, they don't come about as often as we'd like. And so when there is a great trend, you don't fight it. You look for ways, how can I ride this? How can I get a piece of this? And there have been some great opportunities on small pullbacks in this to join it and breakouts to new highs, and we continue to do that. Now, last week's candle is a bit of an interesting one. Okay, we've got they're reporting before the open on Thursday. Maybe there's an element of sentiment. Maybe there's a bit of profit taking. Okay, running into that back into the, let's say, that big round number of 600 there. Maybe profit taking there. Certainly, if you've had that run from let's say from 300 to 600, that's fantastic. That's a fantastic run. But once again, will the earnings be able to maintain this? Will there be numbers that kind of maintain this, or will they basically give us some particular sort of hint or sense about overall sentiment in basically markets? So it's been a fantastic run, but I would be watching this like a hawk coming into Thursday to see how it particularly plays out. All right, there you go, ladies and gentlemen. That's charts of interest of you there. Hopefully, to your watch list, you can take away and watch. Let us now switch across to the live markets and see what's going on there. So once again, just bear with me a second. We will switch across. Boom, boom, boom. Let's bring all these guys up here. Just make sure that everything's working, that you can see. Excellent. Hopefully you can still see, you can still hear. Okay. So this is a my kind of overall kind of indices chart element here. So what have I got here? I've got Dow on the weekly, Nasdaq on the weekly, SP 500 on the weekly, Russell on the weekly, oil, the DAX on the weekly, the Nikkei, and the FTSE 100. Listen, Nikkei, we having had fantastic run. We've kind of drifted a little bit lower, but I suspect part of that is, as I said, due to the Takichi sort of dissolving parliament, and also the kind of combined pincer move in terms of intervention in Japanese yen. So that's what I'll be looking at. It doesn't surprise me that we've kind of sort of just slid away there a little bit. In terms of the let's say the kind of those big American indexes, we've got, as I said, we've got lots of tech companies which are on Nasdaq. But those of you who've joined me over the last few weeks, we talked about how Dow had been still grinding higher, S&P had ground its way up to 7,000 or come off, and even the Russell had continued to grind, although we had a nice kind of sort of bearish pinball there. The Nasdaq. I said this at kind of the start of the year. The Nasdaq has kind of not really followed through with that. We peaked out sort of back sort of into September, October last year, and really I look at this here as kind of we're just coiling up there. I mean, excuse my drawing. I'm a better trader than I'm an artist, but you get the idea, don't you? It has been coiling up. The interesting thing is that once again, the weekly 20 has been acting as support. Are these numbers this week going to be good enough that basically not only do those stocks bound higher, but actually it also takes the Nasdaq and the markets back up and beyond those highs? I think this is going to be an interesting week for this, and I'll be curious to see how the Nasdaq is playing out. Okay, by the end of this particular week, that's kind of my one to chart. Nasdaq, I don't see it terribly exciting. All I see is that we are still holding above that kind of 50. All right, we're pivoting around a flat 50. You've got price, the 20, the 50. All right, just all together, it's almost, as I said, the calm before the storm. Let's see if A, the kind of those earnings reports, and B, let's just say general geopolitical shenanigans continue and take us in the move there. Because as I said, the Dow and the S&P, okay, the last week too had come off their highs, all right, but the trend has remained up. We've not sort of broken any real major structure or anything like that in the other major indices. But I'll be interested to see does the Nasdaq have what it takes to lead? Looking a little bit close to home, the DAX on the weekly chart had been in that weekly, real sort of period of consolidation, come down, bounced off the 50, which it keeps doing, pushed to highs, but then we had, last week, all right, this is the sort of Greenland Davos element there, okay, gapping down, but actually by the end of the week, we've sort of, resolved it a little bit, or, people have sort of not been as panicky, and actually we're going sideways. And once again, we're just under like that 25,000 number there on the DAX. And, there's, it's, it's a week of, we've got a little bit of German data sort of coming towards the end of the week, but I think a lot of this will be based upon the what Trump does and what we see out of America, and how that impacts the DAX there. Okay, with that close to home as well, we've got the FTSE. Listen, regardless of what you think of going on in the UK or the UK economy, you just have to trade what you see, and that has been a good weekly trend. And as I said earlier, when there's a good trend in place, you don't fight it; you find a way to try and ride it. But we started this year pushing to new highs, but then you're also looking at we've kind of come off a little bit, but once again, that 20 period moving average is acting as dynamic support. As I said, we've got the elements in terms of sort of domestic political sort of considerations with regards to the sort of price rolling off there, in terms of is there a negative influence on the decisions of STAM yesterday, and is there a case of how will we be at the end of this week? Will all of that sort of Mag 7 tech data, will that kind of lift markets higher, US markets higher, which lifts everybody else higher, or will it kind of it'll be a bit of a hangover, and we sort of certainly in the FTSE drift towards 10,000? So, of course, whilst everybody has been, whilst we might be looking here at the, indices, of course, all the sort of the news and the joy has been in some of the major metals, okay, precious metals, gold, okay, gold has gone through 5,000. Just look at that weekly chart. I've been saying this all the time. When it's a good trend, don't fight it. Find a way to ride it. The only thing that would concern me is that we are starting to pull away from the moving averages. We are starting to go parabolic, okay. And my view is always is that if you're in gold, all right, and you're holding it, fabulous, well done. But my own view is once things start going vertical, I wonder, how far can it basically how far can it continue like that? How far can it carry on trying to sort of trying to defy gravity? So listen, run it, enjoy it. It is very much the kind of uncertainty play. It's very much the kind of risk off play there, and it's also interestingly, Scott Bessent made a few comments at the weekend about how the sort of effectively the recession in China is what he called it, a recession, even perhaps depression, is kind of driving people towards sort of buying, physical gold, physical silver. All of these elements are just adding to this story of this fantastic bull run in gold and also in silver. So, we had basically, look at that weekly chart. We had silver last week hitting $100, sorry, gold hitting 5,000. Okay, you look at others like platinum, palladium; they've also had a good run as well. Okay, this has just been, this is if you're long silver, fantastic. If you're long precious metals, fantastic. But you do also have to realize and look at, that is also that is a reflection of the sentiment people have in the present economic system, and you can just see that has just continued to just power its way higher. Interestingly, whilst that might have been doing that, we've certainly not seen that in Bitcoin. I thought Bitcoin might have kind of run its way up to 100,000. I think I was talking about that kind of last week. I thought we might sort of get a push to 100,000, and that be the decision point where you've got the big round number, the 50, the 20. But as you can see, that didn't occur. And actually, go to the daily chart, we've basically slid way back down from being up at 97, just under 98,000. We've traded as low as sort of 86,000. There's been that 10,000 sort of, 10,000 sort of dollar drop, okay, in Bitcoin, okay, over the last couple of weeks, right? That is curious, okay, and undoubtedly there'll be lots of people who thought, who probably loaded up heavily at the end of last year, thinking it was pushing its way higher, but it has failed to carry through on that. And then it starts to sort of have an overall impact in terms of looking at, well, how's the dollar impact in that? So, I appreciate we're overrunning a little bit, but there's lots going on, lots for me to cover. We'll have a look at the dollar, the yen, and the sterling, okay, in terms of the FX pairs we can work with. All right, so here we go on the dollar. So what have I got here? I've got my profile. I've got Aussie dollar on the daily, Kiwi dollar on the daily, Euro dollar on the daily, dollar CAD on the daily, pound dollar, dollar yen, dollar Swiss franc, and the dollar index. Okay, so whenever I'm looking at FX pairs, I'll start with the dollar index. You know, we had that double bottom there, halfway through last year. We pushed up to 100. We came back down. I thought we might kind of rally up a little bit more. But as I was saying, we were getting price squeeze between a 50 coming down and a 20 underneath. And we can see that squeeze. It's like a pimple that's popped. And we can see that that's what's happened with the dollar there. That's the start of last, kind of week. And it carried on all last week, the kind of real sell off in the dollar. And even this week, we've continued to sort of gap down there to lows now. Some of that is, of course, the fallout of the Mr. Trump and Greenland and what's going on in America domestically. Also, there's an element there of, as I said, the Japanese, okay, looking to intervene as well. But that kind of working our way higher, kind of, as I said, I think it was price was getting scruffy around the 50, and you can see that it's just literally continued to drop down. Now, admittedly, we've gapped down and we've actually gone mostly sideways for the morning session. I'll be intrigued to see whether we fill the gap, okay, on the US Open in a couple of hours. That's what I'll be looking at. Look at that there. No surprise. Remember what I said. Aussie remains top of the STAM, and look at how the way that has gone. All right, Swiss franc, okay, has been also climbing its way up there, and that's sort of reflected there. Euro has strengthened against the dollar, although interestingly today we might get this is sort of I think perhaps the sort of the Davos price. Kiwi dollar has also been a real benefactor of the moves, whether that's just because New Zealand is a long way from Greenland. You can choose your own narrative. Ultimately, it has been a case of Canadian dollar strengthening against the dollar. That is what we've seen. Okay, that is just that dollar weakness and the strength in all of those other majors, which is what we're looking for. And here we go. Let's have a look at Japanese yen. I've got these on the daily chart. So we've got dollar yen, euro yen, pound yen, Swiss yen, CAD yen, Aussie yen, Kiwi yen, and the Nikkei. So those of you who have joined us over the period, it was literally last year were great trades, okay, in terms of just basically selling yen and buying everything else. But that kind of party is starting to come to an end. Then you've got a double top there on the dollar yen, and you can see for yourself, as we've just talked about, you've got dollar weakness and the kind of that sort of yen strength. And a lot of this, we talked about it a few weeks ago, is the impact on what's going on in terms of JGBs, the Japanese government bonds, how those yields are heading to kind of all-time highs, and that I don't consider myself a bond expert, but what I know is with bonds and yields is that they tend to rally until they breaks, until something breaks, and then it all goes horribly wrong. And hence why we're starting to see kind of a little bit of a concern about what's going on in terms of both the US and the Bank of Japan are looking at how they are looking to intervene. So even CAD yen, look at that for the last couple of days. All right, that has continued to move there. Euro yen, okay, that has basically cracked over Aussie yen, which has been the strongest and has been a fantastic trend. All right, and we covered this last week. Fantastic trend. Even that kind of has basically weakened. Pound against yen, no surprise there. Okay, Kiwi against yen. And Swiss franc against Japanese yen, which is another good trend as well. So watch the yen like a hawk this week, okay? That's going to be a major element to sort of, to keep on top of, all right, and to see how that particularly plays out and the impact that has throughout FX pairs, but then also into any kind of risk on assets. So, the Japanese yen there, is one to watch this week. And then let's finish with sterling, ladies and gentlemen. Let's just bring this up. So remember from the start, sterling has been slipping down the stand, a bit of a mixed picture. What have I got here? My sterling profile: cable on the daily, pound yen on the daily, euro sterling, pound Swiss, pound Aussie, pound Kiwi, pound Canadian dollar, and FTSE. So pound against US dollar has rallied hard, but that is dollar weakness. There's not really any strength there in terms of the US dollar. Pound against yen, okay, had been working high, but as we've just talked about, that has changed. When we look at some of the other markets here. Pound against Swiss franc, okay. And we talked about this last week, is that, we can see that having hit and tapped the 200 period moving average, that has been sterling weakening and Swiss franc strengthening. Swiss franc's gone up the stand, whilst the sterling has worked its way down. Look at pound against Aussie. Aussie's top of the stand, sterling's falling down the stand, and no surprise to see that basically the downtrend there has been accelerating. Strength through weakness. Keep it simple. You don't need to make this harder than it needs to be. As I said, New Zealand dollar has really sort of benefited across the board, and that's what we've seen there. But that's because it has been a kind of swinging about in a range. But you've got that sterling weakness there. It has basically, invariably been messy against the Canadian dollar, but that's because Canadian dollar's been messy. So, this is the sort of what we're seeing going on at the moment. Euro against sterling, right? We did rally up at the start of last week, but then we hit the 50, pinned it, and then we've dropped back into it. So, you've got a picture there of both sterling and euro weakening over the last day or two. Okay, no surprise there. I think, we got a bump last week in euro at it's almost that kind of knee-jerk anti-US, anti-Trump trade. But then actually, as the reality starts to hit in, that's when we sort of drift back into the range, and that's what we've seen there. Okay, ladies and gentlemen, let's draw it to a close there. I appreciate we overran a little bit. I apologize. There's just so much going on, lots for me to share and speak to you about. I hope you found that useful. I hope that's given you a little bit of help, a little bit of insight into your own market analysis. Lots going on, so make sure you stay on top of the news flow this week. Make sure you stay on top of the order flow, and as always, make sure you manage risk accordingly. Have a fabulous trading week, everybody, and I look forward to speaking to you soon. Okay, many thanks.